ChartLens. In today's sessions, I'll be taking you in-depth deep dive about Jayaswal Neco Industries. But before I take up your deep dive, let me give the standard disclaimer that this entire session is only for learning purpose, not for any kind of buy recommendations. So with this, let us start. So the reason why I'm picking this stock, as you all know that from last 1 month, currently there are two strong sectors which currently market is trending. One is the power sector and another one is steel sector. And the beauty about this stock is this comes under both the sector. So, and I can see there is a lot of growth that is still have the potential to grow in the coming years. And that is the reason I am taking this particular stock called Jayaswal Neco Industries. So I'll be taking you in depth about the fundamentals and the technical aspects. So as you all know, my first criteria is always technicals. I'll be explaining later. But now let me take you to the fundamental aspects. So now Jayaswal Neco Industries was started in the year 1972. It was a single founder. And now they are the biggest integrated alloy steel and then casting producers. That means they have their own mines and they have generated power by that. And then they sell the steel products to all the customers. So this is just a short intro about Jayaswal Neco Industries. With this, let us start now. So let us see what all we are going to study in this session. So I am going to explain about the business and for whom they serve and how big is the business and the business model and what is the earning quality, what are the recent performance and what are the con-call latest brief, and then what are the growth triggers and what is the industry landscape, and then what's make them special compared to other stocks, and all the in-depth about fundamentals and the technicals I am going to explain. So in this, let us start now. So now let us take you about the company of long back of 1972. So as I told you that this was started in the year 1972 by the Basant Lal Shah. The headquarters is in Nagpur, Maharashtra, and they listed in BSE and NSE as well. So currently the chairmen are Arvind Jayaswal and the Ramesh Jayaswal. They both are sons of Basant Lal Shah. And currently the sector it is in iron and steel. Even though it is listed in iron and steel, but also they are into power as well. That's the beauty about this stock. And now, initially when they started this company in the 1972, they were making the manholes, covers and then railway parts. But 50 years later, I think no one has imagined that they runs the biggest integrated steel companies because they have their own mines. They generate iron ore through that and then they make their own coke and then they generate power by that. And they have their own steel manufacturing companies where they sell to all the customers like cars, bikes, trucks, etc. If I want to put it in simple terms, it's like they're running the coffee shop or a tea shop where they have their own tea garden and they have their own dairy farm where they're going to supply to the entire city, at least half of the city I can tell. So this is about the short brief about the Jayco company, about the business. So the other good thing is that the market cap is less than 10,000 crores. That means they have the potential to grow from here on. So now let us understand what exactly they do in their business core operation activity. So we all know as an outcome we required the steel bars, billets as a castings. So then now the next question comes, what is the where exactly the steel comes from? Steel is extracted from the iron ores. So now where exactly the iron ores gets? So basically iron ore is extracted from the iron mines. So now Jayaswal Industries has their own iron mines. They have two iron mines which is situated in the Chhattisgarh, which extracts up to 3.95 metric ton per annum. So now once they extract the iron ores from their mines, the next step involves in the coke oven. So now what exactly is a coke oven? Coke oven is nothing but coke is nothing but it's a purified coal where the coal that has been heated to burn off all the impurities. Now why do we need it basically? Because you can't melt iron ore without regular coal. Regular coal has too many impurities. Coke burns much hotter and cleaner. Now it is basically it is a fuel that actually melts the iron, right? So as I told you that, coke is nothing but it's a purest form of charcoal where it can melt the iron in a very high temperature. That's the reason we use the coke instead of charcoal. It's also called as a like pure carbon fuel. So with this, let us move to next process. Now we have something called sinter and pellet plant. So what exactly is the sinter and pellet plant? So now what happens is that whatever the iron ore is extracted from the iron mines, it will be basically in a very big, very kind of rock shape, which we cannot put directly into a blast furnace. So in order to make it as a fine powder, and then this fine powder is converted into kind of balls and then small pellet shape, so that it can be easily put it into a furnace. It can easily put it into blast furnace. Now in basically in center pellet plant, all the rock will be done with powder and then they'll be made into balls. Imagine, I'll just give a normal example so that you can relate. Now imagine like making a laddus from besan powder. You can't eat that loose powder easily, right? So you have to make it as a ball first. Same idea here as well. You cannot directly put that powder into a blast furnace. So that's the reason you have to make it as a small billet size or like small balls lumps. And then once this is ready, like we have the fueling agent coke, and then we have the small iron powder into a balls or a lump shape. Now this two will be passed to the blast furnace. So basically, what are the activity does in blast furnace? It's nothing but it's a like art of this operation basically, because in this step exactly the major operation is done, like major process is done. So here it's like tower shape where all the like pellets, like ball shape of iron ore powder of ball shape and lumps, and then coking agent is passed in the blast furnace. So in blast furnace the temperature will go up to 1500 degrees Celsius. So once the temperature is heated up to 1500 degrees Celsius, we'll be getting as output as a liquid iron. It's the purest form of liquid iron. So there is two ways of generating liquid iron in this process. One is through blast furnace by putting completely, by heating up to 1500 degrees Celsius. But we have other approach called direct reduced iron. In this approach, we'll be using instead of blast furnace, we'll be using the natural gas. So it is also gives the solid form of iron called nothing but liquid iron. So generally they have two ways of doing it. One is through blast furnace, another is DRI. So generally they does both. So the output of this will be the liquid iron. Once they have the liquid iron, the next process will start with the electric arc furnace. So what exactly does here is that once they have the liquid iron, that will be refined into a proper steel. So we'll be getting a liquid steel once they heat up to 1600 degrees Celsius. And the good thing here is that whatever the Jayaswal Neco Industries does here is that they have the purest form of alloy and then special steels, which obviously they'll be used in railways, defense, and these are not normal kind of steel. They are the purest form of steel which will be used in very high value products. So once they have the liquid steel, then it will be rolling towards the rolling mill and machining. So where exactly in a rolling mill and machining, they have their own, based on the products, they have their molds. So they'll pass that liquid iron to liquid steel to the particular molds, and they'll be manufacturing the bars and then billets, castings and everything. So the products will be in the bars, billets and castings. So ultimately as an outcome it may use in railways, defense and all the in auto sectors as well, and the constructions, everything. So now I think now you are understood of all this process, right? So let me just give a brief. So first they extract the iron ore from their own mines. Once they extract the iron ores, they need something to fuel up, right? See, iron ores cannot be extracted directly. They need something fueling agent so that they can burn the iron ores. For that they are generating the coke oven, nothing but it's a purest form of charcoal. Once the charcoal is ready, raw materials is ready. Now raw materials they cannot directly put into furnace. So in order to make it as a small balls and pellets, they'll be doing that in sinter and pellet plant where they'll be making into balls. So once they're done that, then they'll be passing in a blast furnace. Blast furnace will be in tower shape where they'll be putting all the ball shape iron ore inside that, including the coal. They have two ways of generating it. One is by heating completely blast furnace which produce the liquid iron. Other way of doing by sending the natural gas through DRI, that means direct reduced iron. So once they get the liquid iron, then they'll go with the electric arc furnace, where they'll be much more heated, where it generates close to 1600 degrees Celsius, and they get the liquid steel form. So in this process they'll get the liquid steel, and that liquid steel is very high graded liquid steel, not an ordinary steel, and that will be passed to the rolling mills and the machining parts, so, I mean to the molds, where they get the proper castings, bars and billets. So now in order to go all this process, they required huge amount of power in the blast furnace process and the electric arc furnace. Now the question comes, how do they get the power? See, generally if they required electricity, since in order to do more than 1500 degrees Celsius, they take lot, it consumes a lot of power, right? Ultimately, in order to save the the electric consumption, what they're generating their own power. So basically, if you see here exactly at step 4, at step 5, that means exactly at blast furnace and electric arc furnace required huge amount of power. So now instead of taking from the third party resources, what they do, what are the waste gas generated by the coke oven and the blast furnace, they'll be used that waste gases into an actual power, and that's why they're generating power now. So this is how the Jayaswal makes a difference from other companies. So if you see the other steel companies, they takes the iron ore from other company, right? Or they take this iron ore company from other companies to extract this steel. But Jayaswal what does? They have their own mines. That's a one advantage. Second advantage, other steel companies borrows power from third party company. But in some of Jayaswal, they have their own power because all the waste gases is converted into actual power. If you wanted to put in a simple normal way of example is that, let's assume any milk producer company like Nandini. Imagine if the Nandini brand has their own cows, which is the source of the milk, and then milk makes the curd, butter, ghee, etc. And then they also runs the dairy, and then they sells the product. Similarly, what Jayaswal Neco does is that they have their own mines. They convert the iron ores into a coke, liquid iron, steel, and then products wise. They run the blast furnace. I mean, they run the blast furnace and then electric arc furnace by their own waste gases. And there is no middleman, there is no third party company required. That's the reason Jayaswal Industries has a edge over other companies. This is about the complete core operating level. I hope it's completely understand. And just I want to add on that they have this plant situated in Raipur, this complete process plant. But the raw materials plant of 2 iron mines which is situated in the Chhattisgarh. I hope this complete mine to melt shape you understood in depth. So now let's move on to other slide. So now once they have the ready products of bars, billets, castings, so who are their customers? As I told you earlier, Indian Railways are the major customer. Apart from Indian Railways, they have the very good capex from very good orders from defense as well. So let me go each and every in depth now. So first let us understand auto OEMs. As I told you earlier, whenever the auto sector growth, right? Whenever the auto sector grows, obviously Jayaswal also grows, because ultimately the products is coming from Jayaswal Industries, right? If you see the forging quality steel of crankshafts, connecting rods, axle, gears, and all the high quality steels is coming from Jayaswal Industries for the auto OEMs. And now if you see for engineering and capital goods, the BHL mining equipment makers. So again, the BHL mining equipment makers, defense segment, construction steel from the engineering sector. Again, from the Indian Railways, heavy casting, structural parts, manual covers, sanitary castings, long-term tender relationships they have with very good with Indian Railways. Again, in terms of municipal infrastructure waste, they have the CI pipes, fittings, water, sewage system, real estate developers. So that means whenever any sector booms, right, obviously this also has to grow. So the Jayaswal Neco industry doesn't depend on a single client. They have the complete mixer kind of. They are involved in all the sectors. That's the reason they are very different from other companies. So they have the multiple markets are opened up. See, sometimes what happens now, currently power is generating. See, power and the sale team is running. That's the reason that Jayco is running, right? Obviously earlier auto also was doing good. That's the reason Jayaswal Industries has been doing good. Now who knows, tomorrow government may make some capex in infrastructure. They made some, they might make some capex in railways and defense. So obviously this also will grow, right? Definitely. That's the reason it's very different from other companies. Now let's move forward. Let us go to what are the product portfolio they have exactly. So in terms of auto OEMs, they have the like products line like alloy steel billets, rolled bars, crankshaft. I hope you can just directly see this, keywords like forging quality, cold headed quality steel pipe, sponge iron, heavy industrial castings. So now, as I told you, they have 1 metric ton capacity, fully integrated alloy steel at Sitara Raipur. And if you see here, all they have very good quality, and they have very good global connectivity of auto OEMs as well with multi-decade track record. So let's move forward with the numbers now. Look at this. In FY26 itself, they've grown up to 7,000 CR, which is 18% year on year. And look at the PAT, it's 463 CR and 16% EBITDA margin. I think double digit margin is always good for any stock. Look at the market cap, it's just 9,000 CR company. So it has very good potential to grow from here also. And the steel capacity is up to 1 metric ton per annum. And the exact, look at this iron ore extraction up to 3.95. So they can extract 3.95 metric ton per yearly basis. So now let us understand. I think it's already I told you, like they have the headquarters in Nagpur, Star and Center, iron ore mines. So these all things I explained in the previous slide, like blast furnace, coke given batteries, Sintara plant, pellet plant, captive power generation, oxygen plant, rolling mill, and then land refining. So let's move forward. So now let us understand how exactly they make money. So they have the different ways of making money. First is that they have 2 iron ore mines, right? So through that they make money, and then again coke, by generating the coke with the purest form of charcoal, and then by generating the power. So that compared to in terms of pricing, compared to other companies, these guys have the very good pricing, right? Because they have everything in their control. And approval depth, look at this approval depth. They have the 50 years of track record with auto OEMs and Indian Railways. So generally what happens for any company, I mean for any other company, if they want to switch their clients, right, they can't easily switch because the pricing power, the track record will be too much good. Look at the switching cost for buyers are high. Now suppose tomorrow if Indian Railways start thinking, okay, they have to give some alternative companies, they can't do that, because since Jayaswal Industries has everything in their own basis, other companies will not have that kind of pricing, right? Because since they borrow the iron ore from other company, their pricing obviously will go up. That's the reason they can't easily switch the companies. Now look at this integration part. All the alloy steel castings pellets are flexible to shift product mix in the cycle. That means all the products which the Jayaswal Industries produce, it's needed for all the kind of business cycles. Whether you take up auto, whether you take railways, whether you take defense, it's much more needed, right? Correct. So what are the value chain, like mining ore, pellets, again all the blast furnace, DRI, EAF, electric furnace, everything, rolling mill. That's the ultimate core of their business. From mining to finished steel. That's put as a quotation, like mine to finished steel. So this is just like they put like where are the market, how is the current market. Look at their 7 to 8% CAGR through FY30, and auto infra they have very good growth. Look at the government also. Whenever the government is having the infra capex, obviously they have the very good things, right? Look at for auto components, they have PLI scheme from government also, and we all know that currently government is focused on EV transition. Because of that also they have very good market for Indian alloy steels, right? And even if you see at the like their own peers, right, like Tata Steel, JSW Steel, and these are the very Tata Steel, JSW Steel, a large cap obviously, right? So these are the peer companies. So let's move on now. So again, if you think about company wise, the as I told, it's more than 50 years for the company, and then promoter is holding close to 55%, and then they have pledged 99%. That means they have taken the leverage, but they make sure that leverage is getting useful, and I heard that they are paying their debts also, so that's not a problem now. So look at this, they take a 200 share warrant, and then all these numbers looks fantastic. I mean, whatever they're taken money, they're using for the business purpose, not for any other things. So, and that's showing on their earnings also, right? That's very important. So let's move on. This is a revenue. If you look at last 3 years of FY24, 25, 26, the revenues crossed like 7,000 CR now, close to 25. It was close to 6, I guess. Now look at the PAT. From 50 to 100 to direct 600. So this is massive, I can tell. Look at these numbers. Revenue from operation itself. 5,750, 6,000, 7,000 in FY26. It's like 18% year on year. Look at EBITDA also. 28%. Look at this PAT. For 113 to 400. I mean, it's massive. So the PAT has jumped close to 4 times. That's crazy numbers. And look at this. I mean, I just added some few parameters like revenue trajectory. Everything looks good. Nothing. Only thing promoter pledge, but that's fine. I think what are they pledge? They are making use of it and then they're repaying it. Not a problem. So this is what I explained. I think what are the iron mines, full vertex stack, and then auto OEMs. So nothing much here. So this is latest quarterly result. They generate up 1127 CR and then 74 CR PAT. 331 CR of Q2 EBITDA reference. Okay, that's fine income. So far it's good, no issues. So these are the things they have done recently of new 1.5 metric ton of pellet plant, and then railways infrastructure. They got the railway capex, EF expansion, auto OEM capex cycle. Currently auto is doing good, so obviously the capex is doing good. So defense also, whenever the defense order comes, they make money through that. So this is just for educational purpose. Don't consider as any kind of buy especially this slide. So I'll just skip this because I don't want to have any bias to you guys. So let me move on further. This is like what the management has said. So Colgate has been positive. So they are reducing the debts and then they're paying what are the PAT they're generating. They're paying for debt, everything. So look at this. It's so far good, not a problem. So let's move on. EBITDA margin, as I told, it's very good. So final checklist, revenue good, and then margin also very good, not a problem. Everything is good, nothing much. Only promoter pledge, so that is fine. They are making use for their own purpose. So I'll share this slide. So thanks for watching. And before this, I just want to take you technically, like I just want to show you something. So now coming back to technical aspects. So let me move to technical. If you see closely, Jayaswal Industries has been doing good from almost August 2025. Even in bad market also, this stock was particularly very much strong. And if you look at daily chart, right? Let me show you my entry. So to be frank, I entered in that earlier also. I traded this stock. I think somewhere in December I traded a lot of time this stock because of the catalyst. And look at this. I traded on 13th of March, and so far, basically I have in my trading portfolio and my investment portfolio both. Anyways, I'm just a disclaimer, please consult your financial advisor. So this was my entry price at 13th of March, so close to 22%, and then I expect gap up because of strong earnings. Let me show you earnings in screener. Let me JAYNECOIND Neco Industries. Look at 9,300 market cap. Look at 74 to 190. I think just yesterday we got the result of double. Look at this number. I think Monday for sure it will gap up. I have very good position size in this, so I might look for again one more entry here, 100. Let's say I am holding from this day. Even in my investment portfolio also I am holding. Look at this weekly time frame. So if someone is already invested, I think if stock comes below 70, I think it's an exit for them. If someone is waiting for the new entry, just wait for some days, because tomorrow it might gap up because of consolidation. Sorry, because of earning result. So and then I'll be entering above 100 because I already position in this. That's what I always tell before the market. Before the fundamental factors figure out, it will obviously reflect in technical analysis. Look at this. This was a very good chart pattern. It's a very good entries. Gap filling setup, and then there's a good entry here. And if you see my Twitter also, let me show you my Twitter. Let me copy this. Jayaswal Industries. Look at this. I was selling it before it moves only, and this time I tweeted like Jayaswal Industries looking strong, holding a tight range above consolidation, strong theme. Look at this. This is the I posted. So technicals will be always ahead of fundamentals. That's the reason I go with I took this stock, and just look at this tweet. I posted also, in fact, a lot of times. Look at this. Let me show you my actual entry price. I have my drawings here. Look at this. This was my first entry, second entry, and I exited partially, trial stop loss. I push my stop loss here now, so I'll be entering since I booked my partial profit, I can add another cushion here. In my investment portfolio I have complete only my trading portfolio I reduced it. I have completely. So this is how charts are always ahead, before the results come. That's the reason I tell focus on charts. So basically how I got this stock in my radar, I was seeing technically, since it was long base breakout. Look at this. This is long base breakout. So I started to track this company from that day itself. Look at this. Once we had a long base breakout of February 24 close to at 55 rupees, I started to track this stock. Even in a weak market, I was tracking this stock. Look at these volumes. Look at these volumes. Because of this big volume, we may not see the that much spike in volume, but actually it's a good volume. So once we got the long base breakout, I was tracking the stock completely. I was reading the con calls, and look at not only this stock. You take about any stock in this theme, even Indalco also, that I'll be doing soon now. The catalyst. Look at this Indalco. Sorry, not this. Look at this. This also is doing good. Look at this. Again, look at this long base breakout. So whenever the stock comes from long base breakout, try to read the company, because there are some catalysts that can change the business. That's a I get an idea whenever I study company which is coming from long base breakout. Based on my analysis, based on my skill like entry, I take the decent entry, and then I put my stop loss, both my investment and trading portfolio. I hope it's very much clear. Let me show you something. Just a moment. In fact, I mentioned clearly that power theme and steel theme is doing good. Let me. I don't know if I can recall that tweet. Look at this. Lot of stocks coming from power theme today. From March 20 itself, the power theme is running. Power theme and steel theme both. Look at now how many stocks I have in my radar now, including Q. Almost most of the stocks has been more than 30, 40, 20, 30% return so far. See, now currently two sectors are running. One is the power and one is steel. Kindly focus on that. So now this is about the. Let me take you. Jayaswal Industries. Please do not consider as a buy recommendation. Kindly do your own research and kindly enroll for my free newsletter. So you'll be getting an idea like what kind of stocks I am tracking and everything. So kindly visit my website and subscribe for my free newsletters. Thank you very much. Have a good day.